Hello, very warm welcome. You're watching Your Trades on ET Now. This is Priyanka Pull along with me, Shreyans, Snehi. Snehi, what a smart recovery we saw on Nifty and Bank Nifty both today. It was 7 days, from last 7 days, Nifty was trading below 200 DMA, but the kind of recovery we saw, expiry moves and maybe, from last 7 days, and whenever it has happened historically also, whenever there has been a long streak of trading below 200 DMA, then there comes a smart short recovery also. And that's what we saw on Nifty, Bank Nifty. We've managed to close near 24,200. Bank Nifty have also closed above 200 DMA. And that's what, 24,200, 24,300. These calls were being bought clearly. The driving force behind the markets, behind this rally, was certainly the auto sector, which was in top gear today. The kind of December sales dispatch data has come in. The key comments which have come in from especially like Eicher, Maruti, that's what has driven the, that's got the entire auto pack in the top gear. Maruti, we know that they've been facing many problems in their PV segment, slowdown in smaller cars, but then the kind of commentary they've made about the inventory levels also, that's what the traders really reacted to such stocks. And there has been more than 3 months we've seen that the auto stocks have been slumping towards the lower side. But then the very smart recovery, not just auto, in fact the entire consumption pack, IT, services, they seem to be on surge today. Overall, it was a very good day of trading. After many days, we've seen a deep green color coming on markets today.
You know what, green really looks good to see on the markets and on the screen as well, because who likes to see a very sharp red coming in? Haida, let's talk about what the markets have been like today, and like Priyanka summed it up quite nicely, that it's been a day of gains coming in, a 2% of almost uptick coming in on Nifty and Sensex from the day's lowest point, so that's been looking very good for us. And like she mentioned, the auto pack, not only Maruti but very strong numbers coming in from Eicher. Royal Enfield is something that did very well for them this time. Motorcycle sales were up 25% year on year. For Maruti also, like she mentioned, domestic sales were rather good. M&M has done well. They have beat expectations. You have good numbers coming in from TVS Motor as well. Bajaj Auto has also done quite well in today's trading session. So all of these are looking good. Tata Motors also something that has beat expectations. Other than the auto pack, then you had a couple of counters that were in focus today on the back of some brokerage action coming in. And Citi is the brokerage firm that has been quite active in today's trading session, because this morning you had a note coming in on Kotak Mahindra Bank. 90-day positive catalyst is what they generated for this stock. So very positive move coming in. You also had a Jefferies note for Kotak, rather bullish as well. However, what did not do well in trade was Petronet LNG, because Citi's note was a 90-day negative catalyst being opened on Petronet LNG. A roughly 6% cut coming in despite the company coming out with certain clarifications to defend this brokerage note, but nonetheless, that stock continued to plunge in today's trading session. And lastly, we have to also talk about PB Fintech, because we had a conversation. Our editor Nikun Salmiya had a conversation with them, and 30% growth outlook is something that they highlighted, and that is why the stock was also doing pretty well in today's trading session. A couple of more stocks that were in focus. You had RailTel, a couple of cement stocks, Ultratech and Ambuja, in focus on the back of Investex channel check. So largely that's what the market breadth has been looking like. Broader markets have also done really well, because Nifty mid-cap has spurred in the last 30 minutes or so of trade. Small cap also in the green, but nonetheless underperforming the street. Quickly just highlighting what the India VIX has done, more than a 5% cool-off coming in over there, so looking pretty good on that front. But to discuss more about the trading session that was today and what we can expect tomorrow, let's call on board Amar Singh, Senior Vice President Research at Angel One. And Amar, hi. Good afternoon, and thanks so much for joining us on Your Trades today. First of all, wishing you and your entire team a very happy new year.
Yeah, thank you. Thank you, and wish you the same.
Thanks so much, Amar. Give us a sense of what you are making of the markets. This kind of rally that we've seen today, is this a one-off? Can we expect better days, if not to the extent of a 2% uptick at least, but still some more better days on the charts? Is that what the Nifty is indicating to you right now?
I would say that if you look at the way Nifty has bounced back today, that definitely is a positive sign, in the sense that it shows that somewhere or the other on the downside, 23,400, 500, that is acting as a very strong support, and from where Nifty has bounced back. Having said that, the way Nifty has bounced back, so a lot of shorts definitely would have got squeezed today. So we would have witnessed a short covering, decent short covering as well. Whereas on the upside, Nifty could meet with some sort of resistance around the 24,000 200 to 300 zone, not far from the current levels. That's the level where Nifty could meet with some sort of selling pressure. I would say today it was across the board, as you rightly said. We've seen some very sharp moves in the auto space and also in the IT space. So they've really helped, and also Bajaj twins. So these stocks in particularly have helped the index move up sharply today. But sustaining at higher levels, definitely that's not going to be easy for the market, because there would be profit booking coming in. On the upside, immediate zone of resistance is somewhere at 24,200, 300. If that is taken out, then the index could rally towards 24,400 to 500. That would be the next zone of resistance for the index.
So we saw that higher calls were being bought, but now you see higher level from here also. So in that case, Amar, do tell us what would be your recommendations for our viewers?
Yeah, so there are two recommendations. One is from the financial space, and the other is from the auto space. So on the from the financial space, SBI Cards and Payment. This is one stock which really has corrected significantly. If you look at the stock has corrected from almost 1150 levels. Currently, it's around 700. Recently made a low of almost 660 and then has bounced back. And the good part is that even on the selling, volumes had subsided, and on buying days the volumes have increased. So clearly on the downside, it seems to be very strongly supported around the 660 level or so. So this is one stock one can look at buying. SBI Cards, so buying at the current levels with a stop loss below 680 and a target of 737 in the short term. And the second stock to look at is from the auto space, and that is Bajaj Auto. See, what has happened in Bajaj Auto is that the stock has corrected quite sharply, but it has been forming a base for quite long. And if you look at the charts on the daily charts, we've seen some good buying coming in over the last, I would say, 3 to 4 weeks, and on significant volumes on specific days. And today also volumes have been decent enough. So I would say this is one stock one can look at from a short-term perspective. These are all more from a trading perspective, because if I look at Bajaj Auto, on the higher side, it's going to meet with resistance because the intermediate term structure still remains weak. So from a shorter term perspective, buying at the current levels with a stop loss of 8765 and a target of 9530 on the upside can be kept.
For joining us and taking the time out to explain to us what you're expecting on the markets as well as your stock specific picks. So SBI Card and Bajaj Auto have made it to Amar's technical radar. But on that note, time to slip into the word from the wise segment. And today that's not a word coming in from just one expert, but a multiple panel of experts rather. It's a big panel of experts coming in. They are talking about new age tech companies. Now, is there more room for growth when it comes to the new age tech companies? Let's go across and listen to the word coming in from the likes of Prashant Khemka, Professor Sanjay Bakshi, Manish Sonthalia, as well as Nilesh Shah.
This space is bound to see a huge explosion of companies and business models over the next 5, 10 years or whatever, 3 years, whatever time frame you see. As a proportion of the index is bound to multiply from whatever low single digit it is today to first double digit and then potentially 20+%, as it is in many of these countries.
So for me, new age companies that haven't been around for a long time and have not already become very profitable is not something that I would be interested in. That doesn't mean that other investors are wrong when they're investing in it. It's just not my game.
Size of the opportunity is humongous. There is room for everybody. You have many more players apart from Zomato actually enter both the quick commerce space and the food delivery space, and the fast food delivery space also, the cafe Zeptos of the world, so to speak. And, even Zomato has come out with a bistro, and likewise for Swiggy. And you'll have many more come through in the form of, let's say, JioMart or a Flipkart, also announcing the quick commerce model. Size of the opportunity is very big. In retailing, and this be true for any form of retailing, you got to get your unit economics right. And if you get your unit economics right, that is to say per unit order or per unit quick commerce transaction, more than cost of capital, then the sky is the limit for you. And I think, Zomato has the first mover advantage. They have got the unit economics right. They have broken even. They are making contribution margin, which are positive. And now it's only about expansion into tier one, getting economies of scale.
The market opportunity for them is so huge for these platform companies that I wouldn't be surprised maybe 5 years from now, 10 years from now, which obviously is a slightly longish time frame, but 5 to 10 years from now, they really kind of become amongst the top 5, top 10 nifty companies. And that's going to come at the cost of some of these large FMCG product companies.
For growth for this new age platform companies, that's what our host of panels talking about it. We stay for a short break here. When we come back, we get you action from the derivative space. Don't go anywhere. Welcome back. You're watching Your Trades on ET Now. So the action from derivative, we've been trading below 200 DMA from last 7 days, and that's what a short covering trend was very clearly visible on Nifty today, which it took it higher to strikes like 24,200. We've closed near to that only. So short covering trend, what we saw spotted on Nifty, there was a clear long built-up trend on Bank Nifty. In fact, banks have been hovering around lower levels from quite some time, and now that's what the trend has catch up. Short covering on Nifty, Bank Nifty was long built up. India VIX was at 13.8, and now higher calls are being bought into 24,000, 24,300. These are the higher calls where the maximum of the open interest lies, and even market can find support at 24,100, even 24,000, because these are the strikes where the maximum of the put writing has also happened. So looks like we are in for more room from here, for at least if there's a leg up of say 100, 200 points from here, and we've got a support also. So looks like we are in for a smart recovery tomorrow as well.
Well, we can only hope for that given the run-up that we've seen today, but the derivatives are indicating towards that direction. So let's see what tomorrow's trading session holds up for us. But well, let's talk about the big story of the day, and a host of counters were buzzing away on the back of brokerage news like we mentioned earlier. One of them was Kotak Mahindra Bank, roughly gains of 3% coming in on that stock. On the flip side, you had Petronet LNG, and that was in a free fall in today's trading session. Roughly 5.5–6% lower is where that stock was in today's trade. My colleague Jina is standing by with more details on the key takeaways from both of these brokerage notes and what has led to such stock moves coming in for both of these counters today. Jina.
Well, definitely let's talk about Kotak Mahindra Bank. We have two brokerages upgrade coming in. First, it's from a Citi where they have upgraded the stock to buy rating, and the target price is 2,070 rupees. What they say is that the loan growth momentum that will sustain going forward as well. Also, the profit and loss statement now that has improved with delinquency in the trend which is gathering pace as well. Now, the credit cost that is already expected to be at the higher levels. Also, they're tweaking in some medium-term growth with relatively lower beta, and that is why they have initiated a 90-day positive catalyst watch for Kotak Mahindra Bank. Now, another note is from Jefferies. They have also upgraded from buy rating from the earlier rating of hold, and the target price for this is 2120. What they say is that triggers can be in the form of stability in asset quality of unsecured loans and lifting of embargo on digital platforms. Apart from this, they have trimmed the credit growth forecast slightly, which leads to about 2 to 4% cut in the earning forecast for FY26 to FY27. Second stock that is in focus is Bajaj Finance. We have a note by Citi where they have launched a 90-day catalyst to watch for the company. It's positive. They have maintained buy, and the target price is 8,150. What they say is that they're expecting the loan book visibility going ahead. They have a positive NIM bias of about 3 to 5 basis points. Also, the marginal credit rise in credit cost is expected to be around 2.2 to 2.5% levels. Apart from this, they are penciling an AUM growth of about 6% sequentially and 27% year-on-year basis. They also believe that the support to the business will mainly come from mortgage financing, sales financing, and the new business. And going ahead, the management transition update that will be very critical for the company. Lastly, let's talk about Petronet LNG. We are seeing a stock falling from the highs. Well, we have a note by Citi who have opened a negative 90-day catalyst to watch. What they say is, firstly, the maintaining sell and the target price is 310. What they say is the regulator PNG RB has specifically pointed out to the company, saying that the company is profiting immensely at the cost of gas consumers.
All right, thanks very much, Junay, for all those highlights on the stocks that were buzzing in trade today. But let's get you a key comment on Bajaj Finance. We saw Bajaj Twins surging in trade today. In fact, they were amongst the top 5 counters on Nifty, which were gaining in. Digant Haria, who's the co-founder for Green Edge Wealth, he expects Bajaj Finance to perform well in the second half of 2025 also, as he believes that regulatory as well as the asset quality cycles have subsided. Let's listen in what exactly his rationale is.
Bajaj Finance has been the bellwether of personal loans and consumption loans, if we have to say that, and that's a space which has struggled. One from the regulators tightening, and second from this over leveraging of the borrowers and general slowdown there. I think we are coming close to the end of that cycle, and probably maybe 2025 and Bajaj Finance should be at much better levels. See, the price to book has corrected from 9 times to 4.5 times. I think even if Bajaj does 22% plus kind of growth, we can easily see levels of 8,000-9,000 coming. But yeah, I think these regulatory cycles, interest rate cycle, and the asset quality cycle, we are probably just 3-4 months more of pain, and after that it should do well. There's no reason why Bajaj Finance should not do well towards the second half of 2025. So Bajaj Finance, something like an L&T Finance, things in microfinance space, I think they'll all do well after the June or somewhere around that point of time. So I'll be very watching them on a very optimistic note from here.
Okay, so that's the positive outlook coming in on a bunch of those stocks. But let's also take it across to my colleague Rabinder, who's standing by with a list of all stocks that were making the buzz in today's trade. And some of them were really on the tear today, flying high because it's been the day of winners today. Advanced decline in the ratio of 1700 to 943. So clearly some outperformers. Let's go across and revisit them one more time. And Rabinder is here to do just that. Rabinder, take it away.
Well, Retail Corporation of India is in focus, where company has received an order of rupees 78.4 crore from Bharat Coking Coal Limited. Moving to next, CSB Bank is also in focus, where company has announced its Q3 update, and the bank's total deposit was up 22% to 22.17% year-on-year basis, and gross advances was for 26.5% up year-on-year basis. Moving to next, Ashok Leyland is also in focus, where company has announced its Q3 updates, and the Ashok Leyland domestic total sales was up 4% year-on-year basis. And if we talk about domestic plus export, the company's total sale was up 5% year-on-year basis. Moving to next, Eicher Motor is also in focus, where because of the Q3 updates, company's motorcycle growth was 25% year-on-year basis in December month, and CV vehicle growth was 3.7% year-on-year basis, and the stock is trading at all-time high. Apart from this, Punjab National Bank is also in focus, where because of the Q3 update, and the bank's advances was up 15% year-on-year basis, and domestic advances was up for 14.1 basis. If we talk about deposit, the deposit was of 15.6% year-on-year basis.
All right, thanks very much, Rabinder. So on the back of some of the business updates and not many on the brokerage note, we saw overall net a very good trading day, closing in the deep green. Let's aim that the momentum continues for the last day of the first week of January also. With this, it's a wrap on this edition of Your Trades. Thank you so much for watching.